All right, we got some folks trickled in, so maybe we get started here. I'm sure some more will join us. Great to have you guys. I'm excited to have you here, Steve. So, funny thing about insurance agencies, I think a lot of people will describe them as kind of data rich, but actually insight poor. The data models from existing systems are challenging. The data model of the policy is challenging. You have to deal with manual carrier statements, which are never nice and clean. Trouble getting things in and out of siloed systems. All of this stuff leads agency leaders and owners to often run on gut feel. But, I think most people would agree that you should be using metrics to understand and drive your growth. And so today we're going to chat with a forward-thinking agency leader and Steve on how they do this. So real quick intros. I'm James Geyer. I'm the co-founder of Account AIM. We do commission intelligence and revenue visibility for agencies and MGAs. So take the manual process of commissions, automate it, provide a whole lot of revenue visibility in the meantime, so leaders can kind of drive their agency strategically. So that's us in a nutshell, but I'm the less important one here. Steve, it's great to have you. Do you want to share your kind of quick background for folks?
Yeah, sure. So I'm 21 years, I think, in the industry now. About half of it on the agency side, the other half on the carrier side, with different roles in underwriting and as a field rep, managing field reps, and as a project manager, working with analysts and Salesforce people. So, yeah, pretty well-rounded, kind of seen a lot of different things. We're ABP Insurance Agency. We're primarily a property casualty agency. We're located in Fairfax, Virginia, and collectively we speak 9 languages to serve the folks in the area.
That's awesome. I love that. The team over at ABP is great too. It's been really fun working with you guys. Steve, you're a little bit of a unicorn or a purple squirrel, as they say, and kind of like recruiting. You've got sales in your title, and you also have analytics in your title at ABP. Like, how'd you get here? How do you balance the two responsibilities?
Yeah, so how did I get here? So I majored in information systems in college, right? So I've got that background back in the late 90s working in Microsoft Access and learning all the database management and stuff like that. Then kind of just getting away from it, right? Of course, like before I got insurance, I was coaching college tennis, right? Which is completely unrelated, but that's how everybody lands in insurance is through some conversation somewhere. So just to say that I've never actually had this in my title before, but at each stop along the journey that I've had, I've always had some sort of like data thing because I've had the skill set. So I've always done something at each different role to help things out. And actually, when working for one of the big national carriers and working with the analysts, when they didn't have time to do stuff, I would kind of just pick it up and do it and be like, here, does this work? And they would take it and clean it up a little bit and publish the work and do things like that. But also, jumped into the industry as a completely green commercial producer and having to learn the business. So produced for 10 years and ended up moving with my wife to a different area. And instead of starting over from scratch, I jumped over to the carrier side. I did underwriting. I did all kinds of different stuff. So yeah, I mean, that's how I ended up here with the data background and the sales background. I can kind of do either. And at this point now, how do I balance them? Well, I'm not really expected to make, to do production. I mentor the staff. I help them with commercial placements, how to write things and make sure they're done properly. And then when there's spare time, I jump in and I do analytics, right? That's kind of how I fill the gaps in. So if I get a referral from one of my networking partners and says, hey, they really want you to work on this, I'm like, okay, I'll work on it, I'll do it myself. And then as time allows, I jump in and I do the analytics, which a lot of times is at night when the kids are doing activities and stuff. So that's the balance.
Yeah, makes sense. That's awesome. Well, let's get into it. I'd love to actually get your perspective on kind of the state of play for data analytics at agencies. I kind of gave my spiel around, data rich, insight poor. A lot of agencies, particularly in kind of like the mid-market, smaller end, not having good data hygiene and cleanliness. Like, what's your view on this? Like, why is it so important to be data-driven in an insurance agency? Why do folks challenge with this? Like, what have you seen out there?
Yeah, I mean, there's all kinds of challenges that we have, right? Because you're kind of a lot of like you said, small and mid-sized agencies. We're kind of stuck with what we have in our agency management systems. And you mentioned silos earlier, right? And that's a big silo. And if you want to integrate any kind of technology into what you're doing, you're stuck working directly with the vendor and trying to get the two vendors to work with each other to get information either in or out or whatever you're trying to do. And it's a big challenge for agencies to do that.
Yeah, definitely. And then what do you think like an agency loses when they don't have this kind of all like stood up? They don't have a lot of these metrics.
Yeah, you're guessing, right? So let's say you're having a meeting with one of your producers, and the producer comes in and says, "Hey, it really helped me feel a little bit more comfortable. I can have a little bump in my base salary." And you're sitting there, and you're in your head, you're like, "Okay, this is my second number two producer in the agency, right?" And you kind of know that they write a lot of non-standard auto and they write some surplus lines. And if you don't have the data in front of you to know what revenue they're generating, guess what? It turns out they're number two in the agency in terms of production, but they're number six in the agency in terms of revenue, and they're not really bringing in, they're you're making money off of them, but you're not making the kind of money you're making off of the number one and the number three producer, right? So
Mm-hmm.
without that revenue tied to the producer and their book of business and their mix of business, you're guessing.
Yeah, and I think that leads to like performance management too. Like if this is actually a really capable producer, like maybe they don't know or they haven't been told what to kind of focus on. And maybe you can use this data to actually get them to be number one, and then you can bump their base salary and everyone wins, right?
Yeah, absolutely. They could be just, taking orders and the orders that they're taking are for, the non-standard stuff because that's just like if people keep referring them to that. They're like, hey, we need to let's try to turn the story here a little bit. Let's try to get you to into different things that are paying more and making you money and helping everybody, like you said.
Yeah, that's great. Well, I think one of the challenges, and when I chat with folks in the market, is around like, where do I start? So some agency owners will be like, yeah, I know I need to be a bit more data driven, but I don't know how to do it. I don't even know which metrics to look at. It feels really overwhelming, so I just don't change. And so, Steve, I asked you for today to think about like if we were just starting with like the five most important metrics in your experience for folks to look at, what would they be? And you kindly, came up with these five here, which I think I want to just dive right into. And so I'll just kind of say them real quick. It kind of goes from top to bottom. So we have revenue growth, policy retention, weighted premium opportunity, policies per new business customer versus policies per customer, and policy mix over time. So all these together are a mouthful. We'll kind of take them one by one. Maybe let's just start with what's probably the most obvious one, but just like revenue growth. We'd love to get your perspective, Steve, on kind of like why this is so important to look at.
Yeah. So revenue, right? Everybody's got revenue somehow because you have to pay your staff. You have to pay the producers. So at some level, you've calculated the revenue to the agency. You've got the statements that came in, and yeah, I guess you probably put them in a spreadsheet or however you're tracking them. You've got the revenue number. I think a lot of times the thing is when you look at it, you're like, how are we doing versus last year? Like, oh, let me go
Hmm.
grab last year's spreadsheet. Let me pull that out and see how we're doing. And it's not it's at least for us, it was super segmented where if I want to know how we're doing year over year, I got to find that spreadsheet. Maybe we changed the spreadsheet a little bit from last year to this year, and now it doesn't really make sense the same way. We've gotten a little bit, full disclosure, we've gotten a little bit of our revenue data standardized from accounting, and I started playing around with it, and it's fantastic to be able to go back and I can sort it by month and look at different things. I can attach it to the producers. I can look at how much revenue they're generating. The difference, and we're just at the very starting point of this, is going to be dramatic because it's going to give us a lot of insight into what each person's doing, what it's doing by line of business, what it's doing standard versus non-standard auto, things like that. So it's really going to be a game changer for us.
Yeah, I think some people think of revenue as like the output, and it is like it's a lagging indicator, right? But it's also the foundation for how do I make strategic decisions in my business? So why do I point resources in a certain direction or understand kind of like how we're tracking? I think you put that really well. Tell me a little bit, Steve, how do you think about contingent commissions, supplemental commissions as it relates to kind of like revenue reporting? Is there anything important to think about there?
Yeah, well, we don't include it. So you don't know if you're going to get it, right? You don't know in November, December if you're going to get it for sure, maybe because it depends on when the books close for each carrier. But if you're counting on that, that's a dangerous spot to be in, right? Your agency needs to be profitable on the revenue that's generated by the commissions alone. And then anything else that comes in, well, you either take that out of the business or you reinvest it in the business, and that's your decision. But hopefully nobody's looking at the contingencies and they have to have them in order to continue operating.
Yeah, it's a little scary. Yeah. The last thing I'll say on revenue growth too, and it actually is a comment that fits all of these metrics, but like, a lot of agency owners are looking for their business to be acquired or they're getting older and they want to think through like perpetuation. I think like being able to show this great historical information that's segmentable by, carrier by producer goes a long way in building trust with your acquirer or even just your valuation in terms of how folks
Mhm.
can actually kind of underwrite the business. So I think that's really
Yeah,
important there too.
absolutely.
Let's move on. So that's revenue growth. Policy retention. There's kind of a few flavors of this. So talk to me here how you think about policy retention.
Yeah, so that's how an agency makes money off of the retention, right? Because most agencies are paying more for the new business than they are for the renewals, and the renewals are the house money, right? So if you're not if the retention is bad, then the money's going out the door, right? You're bringing it in and you're paying the producer, and then you're losing it in year two or three. It's not a great way to build a to build the agency revenue. But also, we got to look at, if you're just looking at the premium dollars and somebody comes into your door and says, "Hey, how's your agency doing?" Like, "Oh, we're doing great. We're growing. Like, premiums up, revenues up, everything's great." But then on the back end, say you're coming out of a hard market and your premiums been going up and your revenue's been going up, but then on the back end, you weren't watching that policy retention and the policy
Hmm.
retention is slipping. And then all of a sudden the market turns and now soft market, your retention continues to drop, right? And you're getting the double whammy because now you're remarketing accounts, you're renewing them for less, and now that's hitting you twice. And now you went from growing to shrinking at a very rapid rate because you weren't keeping your eye on the policy retention. Because you could have, if you were watching that, make some strategic changes to try to level that off a little bit.
That's great. How do you think about like the definition of policy retention? And maybe not in, a granular Excel formula detail, but like how do you think about it conceptually?
Yeah, so you're looking at what you have on the books today minus the new business divided by the prior year, right? So you're comparing it to the last year, but like getting rid of the new business.
Yeah, got it. Okay, cool. So it's yeah, when the percentage of policies up for renewal that do renew is kind of how I think about it at a high
Yeah.
level. That's
Yep.
great. Tell me more. You mentioned like being able to make some changes. Like what are those changes if you do see it dipping? Is it mix of type of business like you kind of just talked about, or is it something else?
Yeah, so it totally could be. If we're talking specifically about policy retention, maybe it's account round, but again, that's going to hit new business. But it's all what else we've done in our agency is take we have a team that is keeping an eye on a report that is actually in our management system that shows when the renewals come in and the increase in premium, and we're pulling those things out early and we're remarketing them proactively to try to
Mm,
retain that business. So yeah, maybe you do renew it for a little bit less, but you renewed it and you kept it. And a lot of times these could be house accounts. And if they're house accounts, you're keeping 100% of the money in the agency and you're able to level that off a little bit. But if you're not watching it and you're not being proactive, then it just keeps getting worse.
100% love that. Okay, cool. So I think of revenue growth as kind of an output, almost like a trailing indicator. Policy retention technically also is, but I also view it as like a leading indicator as you like put really well, as like you can kind of start to forecast the future a bit more from a profit perspective for the business. Another kind of forward-looking metric we have here is weighted premium opportunity. And I think the first two people probably recognize. Not everyone will maybe understand this phrase. So kind of walk me through what this is.
Yeah, so this is the premium dollars that you have. So in the pipeline, right? So it depends. Each agency works a little bit differently. Uh, I think the best way to work is when an opportunity comes in, you have them key it into a CRM or your agency management system,
Agreed.
and at that point, they're putting in like a likelihood of being able to close this account and a rough estimate of the premium, right? So you take that, you have that premium that's in there, and you can forecast it out and see what's hanging out there, and you can multiply it times the probability of close, either that the producer estimated, or you can use historicals. Or if you don't have historicals, just Google it and pick a close ratio. Give something
Hmm.
so that you have some sort of weighted premium that is out there in the future. And if you're watching this over time and that starts to slip, and you're looking at it and it's the middle of the summer, maybe you can explain it away and say, well, so and so is on vacation, or like a lot of the customers are on vacation, or whatever's going on. But then you can compare that to the year before and go, wait a minute, no, actually we are down year over year. What's going on? And trying to find out what it is and steer the ship a different way.
Yeah, this is kind of like I think it's actually a great metaphor steering the ship. Like this is like the best lever for are we going to hit our number in this calendar year, right? Because we can actually see what's like in the pipeline versus historically and how it converts and kind of like you can actually calculate the delta. So if we have our current revenue base, we have what we believe to be our retention rate for existing policies that are kind of up for renewal this year, and then we also have our weighted new business premium opportunity with, historical close rates. That pretty much builds you your number for the year. I think it's a really powerful tool.
It sure does, but you've also got to keep an eye on like, hey, is there a whale in there? And
Hmm.
somebody's working on a $500,000 account, and they put in there that they're 90% confident they're going to close this thing because it's a personal friend of theirs and blah blah blah. You gotta be careful with that because if that's a lot of eggs in one basket, right? And if that one doesn't come through, then you got to see what else is in there. I mean, you throw out the outliers or whatever you're going to do to see where you're going to land.
Totally, but it's great for resource management too, because if you do have a whale, I'm putting the CEO of the agency like in those meetings too, right? To try and reduce all risk.
Yeah.
Okay, awesome. That's a really great kind of like formula to understand if you're going to grow or shrink in 2027, which is kind of the whole name of this webinar. Let's move into like these next couple. I would bucket these under like account health broadly. So talk to me about
Yeah.
policies. It's kind of two metrics as a comparison. Policies per new business customer versus policies per customer.
Yeah. So policies per customer, you want your accounts to be rounded, right? Everybody knows that if you write two, three, four lines of business for an account, they're stickier, right? You don't have an agent who's not in your office writing the home and you're writing the auto and they're calling and the customer walks away, right? It's an uninteresting, I don't think that's a word, number to look at on a report because it doesn't change that much, especially if you have thousands of policies on the book. I could tell you it's like it'll say the same number every single day when you bring it up. So by itself, it's not that interesting. But let's say you have a a goal of increasing that, and you're telling all the producers like, hey, look, I want you writing rounded accounts. And sure, somebody's going to call in and say, hey, I need a GL policy for my contracting business so I can get paid at the end of the week. All right. And that's all they're going to buy. No matter what you do, you might as well write it. And you got one line of business on the books. But if you're trying to track, especially like personal lines, right? Are we writing rounded accounts, which I guess in a personal lines is going to be two, right? Maybe it's three with the umbrella, but you want it to be around two. And then on commercial lines, you want to write 2 to 3 lines of business. Four is fully rounded, right? And so if you're looking at the policies that you've written on new customers, you can see if you're trending in the right way, right? Because that again, that
Hmm.
policy per customer is not going to change. But if you're looking at your new business, you want that number to be higher if that is what you set out as your mission is to increase the number that you're writing on the front end.
Yeah, this is so good. It's like it's a chain here. Now I'm thinking how I want to re-architect this slide on the screen. It's like, okay, policy retention numbers are kind of forward-looking for how we're going to build profit in the future. But this policy per new business customer is actually a leading indicator for policy retention because the more rounded the account is, the more likely it is to renew, right? And so this to me is like the operational cadence of how do I view this and make sure that I'm actually moving this number in the right direction to ultimately move this number in profit. So it's pretty cool how it all kind of fits together.
Yeah.
Last one here. I think it's kind of similar in flavor to think about profit, but policy mix over time.
Yeah. So again, you've got personal versus commercial. You've got standard versus non-standard personal auto. You've got admitted versus non-admitted. You've got lines of business for commercial. You've got premium and revenue by industry. So there's so many different ways to look at this policy mix over time. But you attach that to revenue, right? And you look at it by personal versus commercial. Like how much, excuse me, percent of revenue or however you want to look at it, personal versus commercial. And sitting with that producer that we were talking about earlier, where they're writing a lot of non-standard auto and showing them like, look, your book is 67% your personal lines book, non-standard auto, and here's the rate you're writing, and here's what the agency average is, here's what the industry average is, and you can have more intelligent conversations about it. But being able to see the revenue that's coming into the business based on that mix is a very powerful number.
I love it. This is great. I want to move on to kind of like getting to these numbers like tactically, but anything else to add, Steve? I feel like we covered it pretty well, but anything else to add here on like the metrics that are kind of important here, or do you think we covered it pretty well?
Yeah, I think those fives pretty well. I mean, there's other things that we track in the agency. We have a report that we call the 12 box, and we've got 12 metrics on it that we kind of watch every day. And that there's different things. We can't we so along with I guess policy retention, we also look at customers and customer retention. So
Hmm.
that again, they're kind of tied together, but they can wiggle a little bit. You could lose a policy but not lose the customer, but a lot of times they kind of go together.
Yeah, awesome. Well, appreciate the roundup. So, Steve, you lead analytics at ABP. Talk to me. If I'm a leader that doesn't have this visibility right now, what's the process here? Can I pull this out of my AMS? What are the challenges there? Is it doable? How do you think about those?
Yeah, I mean, it depends, I guess. Do you have somebody in your agency that's pretty good with Excel, right? Or at least at a very basic level. Could you go in and pull some reports out? And I can tell you, like we're on Easy Links, not to plug any particular agency management system, and we have advanced reporting, so I can kind of pull any fields I want. But if you're stuck with the standard fields that come out, you could pull a book of business report, right, that would show everything that's active in your agency. You could even, at least in Easy Links, you can sell it to like filter off of active and you can see everything, right? And you can see the most recent state of every policy that you had on the book. So maybe you could look at canceled lost policies and pull some information that way. And then I think most systems allow you to pull a transaction report which would show you every single transaction that's happened on each policy, right? So with those two, you could do some, you could find some metrics, right? If you've got somebody in your agency that's pretty comfortable with doing that stuff. But I would say the best way to go about this would be to build yourself a data lake. And that's something that I didn't do myself, right? We engaged a third party to do that. And you could build that data lake either via APIs where you're going out and you're interacting directly with the agency management system and pulling things in and building tables. Your vendor builds tables, or you could do it by pulling reports. And if your reports are thorough enough, you can pull that data in and build your lake that way. So there's two ways to do it. But I would say having that data in the lake is very powerful because now you don't have to call up your agency management system vendor every single time you want to integrate a new thing. The data is in a lake, and anybody can interact with that data, right? They could go in and like you give them permissions to read and they could pull things and say you want to do like I don't know, a receptionist, a virtual receptionist, right? And you let it go in there and grab it and they see the phone number that's incoming and they know who the producer is based on the information that's in there and they route the calls. I mean, there's all kinds of things you could do without having to get that integration going directly with the vendor.
Yeah, and I know integrating with some AMSs is surprisingly challenging, sometimes expensive. But yeah, I know from talking with you guys, like getting your data lake up was kind of like a game changer for you. It kind of unlocked is like the foundation for so much strategic initiative that you guys could move into. And there's all this talk of like AI, but if you really want to take advantage of AI, you need to have your data in one place. You need to have it clean and trustworthy too, and kind of have like that context layer for AI to work from. And I think getting it into a lake is step one, something that we help a lot of insurance companies with too. And so for any folks listening, always happy to chat about that as well. But there are plenty of great providers and agencies out there that do that for folks as well. Any surprises in that process, Steve, that folks should be aware of? I know you said you engage a third party, but you're obviously still on the hook for some of the business requirements and definitions and things like that. Was there anything surprising there, or was it pretty straightforward?
I think it was pretty straightforward. I mean, we're working with a company that had done this before. I know like Account Aim, you've worked with all the different vendors that are the AMS vendors, so you've kind of seen everything and you've got experience with it. I think if you're working with a company that hasn't done that before, there'll be a few bumps in the road. Um, just being able to map the fields and everything, they're going to ask a lot of questions where like Account Aim and other vendors that have done this in the insurance ecosystem for a while already kind of know what's going on, at least with three big dogs out there in the AMS world, and can set that thing up pretty easily.
Yep, that's great. Well, cool. Anything else to say on? I'm just looking at my notes here. What's different now that you guys have the like you talked about it a little bit in terms of the example with like the virtual receptionist and things like that, but now you guys have your data in the lake. We're providing you some of that revenue data and we're still kind of operationalizing that. But did this unlock anything we haven't already covered like for the agency? I'm just thinking again to the benefits versus costs for any kind of owners listening to this on the decision.
Yeah, so it definitely unlocks a lot of things. Vendor conversations that we had had before, because it's so Easy Links, right? It's not it's not Epic and it's not AMS 360, and those are the two big ones, right? So when vendors are going out and they're targeting the AMSs to go after, those are the two, and Easy Links is they do that later, right? And there's others out there, so they're going to kind of go down the list and they're going to try to do the ones that have the most users first. So we had shut the door on a bunch of vendors before because they didn't integrate with Easy Links. And now, if it's in the lake, we can revisit some of that stuff and we can do some different
Hmm.
things that we weren't able to do before and consider other technologies that we couldn't do before with this data in the lake. Because now you can just call them up and say, no, 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 you don't have to integrate with them anymore. You can just pull it straight from our lake and get the information that you need to do this integration.
That's great.
Yeah,
Cool. I wanted to say we have about 5 minutes left, and I always like to say that time for audience Q&A, Steve. And so I saw one or two come into the chat while we were speaking. And anyone listening, feel free to put some more in here. So I'll just kind of run through these
sure.
quickly. The first question was, you mentioned maybe pulling out contingent commissions. From your revenue numbers because you don't want to bank on that. But the question they're curious if you use data or metrics to help hit contingent commissions. Like, do you see
Ah,
much about driving the business there?
yeah. All right. So we didn't get into this, but we've got a human right now that does our commissions, right? And they spend 5 to 8 days a month just doing the commissions, right? So now that we're working with Account Aim and we're getting closer to the point where they're going to be able to kick reports out for us, and what we're going to do with that person is redeploy them And one of the places where we're going to deploy them is in pulling claims information from all of our different carriers so that if we
Mm,
have this claim information, now we can sit down and we can more accurately predict what's going to, which ones are we on track for? Maybe there's some claims in there with high reserves and we could pick the phone up and call adjusters and have conversations and see like, hey, what's going on with this? Why is this reserve still sitting out there? It's September. I really like to see that reserve come down. So yeah, we're definitely there are other things that are happening because of the work that account aim is going to do for us.
that's awesome. I look forward to seeing that. All right, I don't want to divert the conversation. Someone here, the next question wanted to clarify on AMS data access. So they were basically saying in the question, if I summarize it, they didn't want to pay the cost for direct API integration. They were kind of
Yeah.
curious for you to elaborate on the pulling existing reports. Like how does that process work in regards to a data lake?
Yeah, so speaking specifically about easy links, and we'd had this conversation in the agency yesterday. Surprise to you, James. We're actually because we have got to pull some data via report anyway because the easy links APIs don't give us everything that we need. Um,
Hmm.
Surprisingly, they don't give you the named insured on the policy, so we have to pull that by report and attach it to the data lake every day with the refresh. And we're having a conversation going like, well, now with advanced reporting, I can get anything I want. Why don't we just pull the reports? And so what I do, here's the secret sauce, right? So we have a reports at ABP Insurance email address. I have the reports, I schedule them to go into the reports inbox, and I use Power Automate to go in and grab the Excel that it generates, and I push that into our data lake. And then our vendor picks it up, does what he does, and it shows up as a table, right? So it's totally possible, and we're actually thinking about reverting back from the APIs because we are paying a monthly fee for that. And yeah, we
Mm.
paid upfront costs, and we paid to get all this stuff set up. But it might make more sense going forward just to run the reports now that we have advanced reporting and we can pull everything we want in the format that we want and just put it in there. So it's totally possible as long as you have some sort of elevated reporting access where you can choose your fields and put them in there because they don't necessarily give you everything that you need.
Yeah, really, really fascinating. And a good little hack there too. I like that. All right, last question here because we're running out of time. This person wants to, or they said they really like the policies per new business customer as a metric. They're curious if you have any advice operationally on kind of once you're viewing that, initiatives to actually move that number in terms of how you're actually coaching producers to round accounts better, basically.
Yeah, so we're jumping into the other side of my role, right? So yeah, so the coaching. So we hold periodic trainings, and the trainings can be anything from like this is how you rate a contractor, or like it can be really anything. And we've hit this topic before, and we've talked about account round. We actually have a few um, sales classes coming up. I have a counterpart that's a director of commercial, and she's going to do some sales classes coming up, and that's one of the focuses is talking about rounding your accounts right off the bat because we do have a couple of agents that are realtors and
Mm.
their books are super home heavy. But like coming up with sales techniques to be able to write that and like hey like we could bundle, that's the big word, right? But if we bundle this thing, why don't we look at the auto at the same time we're looking at your house for your purchase, and let's get this whole thing together and save you some money. So trying to bring those whole accounts on in the first place and coaching them up to do that. Yeah. Mhm.
That's awesome. Yeah, the training and the sales expertise combined with the data to see if it's actually working is kind of like an iterative loop, right?
Yeah.
That's awesome. Well, Steve, we were right at time. I thought this was awesome. So thank you so much for coming on and chatting with us as kind of a gold mine of information. Anything else I should have asked you that I didn't, or any closing thoughts here before I let you go?
I don't think so. I mean, 30 minutes went fast, I tell you.
It's fun. Maybe next one we'll have to do your 12 metrics that you're looking at daily, and
Let's,
then we'll
yeah.
turn it into 45 minutes.
Right. All right. Thanks
All
so
right.
much,
Thank you,
James.
Steve.
This was great.
Thanks
All
everybody
right.
for joining. Cheers.